Okay, so hello everyone. Thank you so much for joining the Colorado Department of Labor and Employment today. My name is Tracy Marshall. I serve as the Division Director of CDLE's Division of Family and Medical Leave Insurance. I'm joined today by several members of our technology team and also our policy team to help answer your questions. Today, we'll be quickly going over how to register your business on our employer services portal, My Family Plus Employer. Then we'll spend some time reviewing what to do if you work with a third-party administrator or a TPA. Then we'll open it up for questions at the end, and we will answer as many questions as we can in a 30-minute time frame today. Before we get started, here are some quick housekeeping items for you. This presentation will be available on famli.colorado.gov shortly following the webinar. We'll also share it with everyone who registered. Please ask your questions in the Q&A function of the Zoom meeting. The chat function has been disabled. You can find recordings of our previous webinars on our YouTube channel that cover a variety of different topics. Let's dive right in. So the first thing you will want to do is navigate to famli.colorado.gov to find the My Family Plus employer page. There you will find several materials, including how-to videos and step-by-step guides that will help you to use the My Family Plus employer system. Clicking on the Log In to My Family Plus employer button will take you to the portal's welcome page that looks like this. When you're visiting for the first time and you need to create an account, you'll click the Create an Account, which is underneath that main Sign In with Login.gov button. After your account is created, you will click the Sign In with Login.gov any other time that you need to sign in to My Family Plus employer. We won't go through the entire process today, so we have more time to answer your questions, but the registration process only takes a few minutes. Just carefully follow the prompts on your screen and make sure you select the correct business type. If you are a local government employer, a TPA, or an employer administrator, it is important you select the correct one. We've received several questions from employers who work with TPAs. Here's what you need to know if your business is represented by a third-party administrator. First of all, connect with your TPA. They may be registering on your behalf. If that's the case, you don't need to register your business again. If you've already registered your business on your own, let your TPA know that you've completed the process. Your TPA will be able to create the proper TPA and employer relationship in My Family Plus Employer by bulk filing and referencing your business. This TPA employer relationship needs to be established so that your TPA can submit wage data and premium payments on behalf of your business. All of this is outlined in the TPA user guide, which is available on our website. I will wrap things up by directing you to the additional online resources. On our My Family Plus employer page, you'll find step-by-step instructions for employers, local governments, and TPAs. We also have how-to videos on how to register and how to submit your opt-out letters if you are a local government employer. We also have 2 additional quick reference guides specifically for TPAs. We have file specifications for TPAs and sample file templates for those TPAs who will be bulk registering on behalf of the employers they serve. We have also added another live webinar to the schedule. We'll be back again on Wednesday, January 4th at 11 a.m. to answer more of your questions. The topic for that session will be focused on third-party administrators, so employers and TPAs are encouraged to join us. You can find the link to register for that session on the calendar of our homepage and also on our webinar page. We do want to get to as many questions as possible. And if we don't get to your question, again, you will have that additional opportunity to engage with us during another live webinar early next month. And you can also reach out to us in the email address on your screen or via phone through our contact center Monday through Friday between 8 a.m. and 4 p.m. I'm now going to hand over to Jessica, who is our communications manager, and she will be moderating today's questions.
Thank you, Tracy. Our first question here is from Charmin, and I will acknowledge that we've had several questions come in that have already been answered, and we'll get to those if we ever find ourselves with a lull, but I don't think we will. Charmin is asking, is this referenced anywhere in the handbook? I have several MSRR employees asking about this new tax. Thanks. I'm not exactly sure what this is that you're talking about, but we do have an employee handbook available on our website, and I'll have Michelle drop that into the chat. That handbook will go over everything your employees need to know, that should they have questions about what they should see on their paycheck starting in January. We have a question here from Janice. Are student employees eligible? Also, specifically work-study student employees. For this question, I'm going to hand it over to Evan.
Thanks, Jessica. Yeah, the short answer is yes. The only employees who are exempt from participation essentially are certain employees of railroad employers who would be covered by like the Railroad Insurance Act. But yes, student employees will still be covered.
Thanks, Evan. We have a question here from Charles. When an employee applies for family leave, how long does that process take? Tracy, do you want to take that one?
Yeah, I'm happy to take that one. So that process will not start until late next year. We don't have a fully baked system yet for that process, but it shouldn't take more than just a couple of weeks.
And here's a question from Victoria. I registered on login.gov, but I'm struggling to connect my employer. I'm going to hand this one to Jude to talk about login.gov. But if you are an individual and you're trying to connect your employer or you're a TPA, there's a couple things that could happen here. But Jude, would you mind talking about login.gov?
Sure. And so login.gov is merely a way to authenticate and set up multi-factor authentication so that your access to the system is secured. But registering for login.gov alone doesn't allow you to, login.gov does not allow you to connect the employer to your account, if that's what you're seeking. You do that through the portal. So I'm going to call on Corey or Ann if there's any additional context you've heard that might be valuable to share.
I mean, when I read that question, I was really going to probably refer to her as to the contact center, because there might be some individual components there that we need to talk through, and I don't know the right time and place. So Victoria, I would say let's get you in touch with the contact center team. Let's identify what's going on with your account in particular, and then get you all squared away with registering your employer.
Thanks all. Our next question here is from Lisa, and I'm going to hand this over to Evan. Can shareholders of an S corporation opt out whether or not they are the only employee?
So the answer to this ultimately depends on whether or not the individual is considered an employee under the definition of the FAMLI Act, where there's an S corporation with one owner. That one owner is often going to be not an employee under the definition, regardless of whether or not they pay themselves a salary. But ultimately, it's going to turn on that definition. And just sort of briefly, there's a very broad definition. Almost anybody that does services for another meets it's the broad definition of employee, and then there's a narrow exception. If an individual is both free from control in the performance of the work and is performing the work as part of their own independent business, then they're not an employee. So if you're a business and you have nothing but individuals that aren't employees, then you're practically not an employer for family purposes and don't have to do anything.
Thanks, Evan. And that answers Lori's question as well. Here is a question from Sally. I work with Intuit Payroll. I have called them 3 times and they do not know what I'm talking about. What should I do? I'm going to hand that to Corey H.
I would say, I think that's a communication thing. I would reach out to your TPA, and if they are having trouble or don't know what family is, they can reach out to us. We have met with several TPAs and as a part of the NPRC, so they should be aware. And if they have questions, they can also go to the family account, and that's linked here. If that answers that question. I don't know.
Thanks, Corey. And yes, please connect with your TPA. As we've mentioned before, we have worked with Intuit and QuickBooks. They should have some resources on their website as well. They are able to register on your behalf, but please connect with them to make sure that they're doing that for you, or whether or not they'd like you to do that on your own first. We have a question here from Julie. What are the out-of-state employee roles? I'm going to hand that to Evan. What are the out-of-state employee roles?
Without any more detail, I will offer this, which is if you're a Colorado-based company, but some of your employees work entirely outside of Colorado, then you may count them toward your employee or employer size headcount, which determines your premium liability. But those workers that don't work at all in Colorado, their wages aren't subject to premiums, and they are not entitled to benefits. They're just not covered.
Thanks, Evan. And here's a question from Sin Nguyen. I'm going to hand this to Corey. And it looks like someone just answered it for her. But the question was, I'm a TPA with multiple employers. How do I register multiple employers? Corey, can you just briefly go over that process?
Yep. So as we stated, we have several pieces of information on the CDLE site, but essentially you will register yourself as a TPA. Once you have registered yourself as a TPA, you will have the ability to register all of the clients that you have access to, either through manual portal registration and connecting that, by API, or by bulk registration file upload, which would be XML or CSV.
Thanks, Corey. I have a question here from Rose. Hi, I process payroll for many clients with less than 10 employees. I understand that employer contribution are not required, but do employers have the option to contribute anyways? Tracy, would you like to take that one?
Absolutely. Employers always have the option to contribute on behalf of their employees if they wish. And if you, as a small business owner, are choosing to pay that 0.45% on behalf of your employees, you're certainly welcome to do that.
Thanks, Tracy. Here's one from Patrick. Does the premium payment apply to owner employees if they wish to opt out? Evan, I'm going to send this one to you. Does the premium payment apply to owner employees, if they wish to opt out?
So based on the phrasing of that sentence, I'm going to assume that we're talking about individuals that both have an ownership share in the company, but are still otherwise employees because they don't meet that 2-part exception. If that's the case, then you're an employee and your wages are subject to premiums. There isn't an individual opt-out.
And here's a question from Kamal. We are a CPA firm and have many small business accounts that need to be filed for family. Do we need to create the account as a TPA? I'm going to hand that one to Corey H.
I mean, I think if you are acting on behalf of your employers and client accounts as a third-party administrator, I would say yes, you need to create a third-party account and then register your clients. I hope I answered that right. I'm a technology guy, so I don't necessarily know the difference between a CPA and a TPA. But I'm going to go with I hope that's the right answer.
Thanks, Corey. Here's a question from Ashley. Is a policy required to be added to the employee handbook? If so, when should this be in place? Tracy, do you want to take this one?
We do have language on our website for you that can go into your employee handbook. You do need to be communicating with all of your employees by the end of this year. So there are just a handful of days left to get those communications out.
Thanks, Tracy. And I have an anonymous question that I'm going to hand to Evan. Can you review what compensation we will apply to the 0.45%? I want to be sure if it is applied to tech stipends, car allowance, or just simply their wages they earn.
So the 0.45% premium will apply to everything that constitutes wages under UI. So we have an equivalent definition there. So I would probably have to know more detail about the individual circumstances. But if you're not reporting those sorts of reimbursement expenses under UI and that passes UI muster, you should be good for family as well.
Thanks, Evan. We have another question here from Janetta that I'm going to hand to you. We are a transportation company and have employees that reside all over the country. Do we withhold the deductions for all employees or only those that reside in Colorado or that work only in Colorado?
So this is a great question. It's complicated and fact intensive. It doesn't turn generally on where an individual resides. It's really where they work. And so if they work completely in Colorado, then yes, you'll withhold you can withhold deductions from their wages. If they work primarily in Colorado, but their work outside of Colorado is just sort of like temporary or transient, same thing. You would withhold all of their, all of their wages would be subject to premiums. If they don't work primarily anywhere, but they work a little bit in Colorado, they work at least some, but there's no like primary, state that they're localized to, then we look at where the employer's base of operations is. And so if your base of operations is in Colorado, your employer works in multiple states, including Colorado, but doesn't primarily work in any state, then all of their wages would be subject to premiums as well. There are more weeds to go into, but I think I might have taken you deep enough. But you don't have to interact with anybody's wages for purposes of premiums for your employees that don't work in Colorado at all.
Thanks, Evan. I have another question here for you from Vicky. How long does an employer need to guarantee an employee's job if they are out on family leave? We are a small employer and FMLA does not pertain to us.
Sure. So the answer is if they've been with you for 180 days, then they're entitled to return to the same position or an equivalent position. So practically, how long do you have to hold the position open for them? For the duration of their leave. So that would be up to 12 weeks, unless they had pregnancy or childbirth complications. Then it could be up to 16 weeks. So only for the duration of leave.
Thanks, Evan. Here's a question from Richard that Tracy, I think you can handle. Do employers have to pay an additional amount per paycheck for the family premium, or is the payment solely deducted per employee paycheck?
So that one depends on the size of your organization, the size of your company. For those employers that have 9 or fewer employees, there is no requirement for the employer to match the employee contribution of 0.45%. If you have 10 or greater employees, then employers do need to match the 0.45% contribution. So it will total 0.9. Half of that will come from employees, half of that will come from the business.
Thanks, Tracy. And we have a couple more questions here coming in about S Corps. Evan, I'm going to hand this to you. If an S Corp who pays themselves and only themselves elects to pay the employee portion as an employer, do they only have to file quarterly? I think there's some confusion there.
Sure. I mean, I'm not super clear what the question is, but nobody has to file more frequently than quarterly. So if you do have a filing requirement, it's not going to be more frequently than quarterly.
Yes, and if you are the only person and you are considered a self-employed individual, your participation is optional.
Yeah, I mean that's accurate. So if it's a single owner S corp who otherwise pays themselves a wage, they don't necessarily have to treat themselves as an employee for family purposes, and they're probably not if there's no other owners or workers under the S corp. So if that's the case, if it's just a single owner, then they are almost certainly self-employed and their participation is optional.
And here's another one that adds another layer to it from Jeremy. If I am an S corp and I have 9 employees plus myself, do I need to match the 0.45%?
So that depends if Jeremy's an employee or not. If Jeremy's the owner, then and is probably therefore free from control in how he performs the work, and this business is his independent trade, then Jeremy would not be an employee and would not have to count himself toward the head count, and therefore would fall under that 9 or fewer bucket. And we're just talking about a total premium remittance of 0.45%, of which the employees can be required to contribute completely.
Thanks, Evan. I have another question here from Katie about asking about out-of-state and remote workers. There's a lot in here, so here we go. I work for a small private company who is based in Colorado and has offices located in Idaho and California. There is 1 employee and 2 owners of the company who work in the Colorado office. The employees are not remote, so we do not fall under the counting remote employees section. The company is also not based in another state with employees working in Colorado, so we do not fall under the counting nationwide employees. The company does currently offer a minimum of 128 hours of paid personal leave annually. Total employees throughout all 3 offices are 26. There's not a question in there, but I'm assuming you're asking, how do we participate?
Well, I mean, so yeah, lacking a question to answer, I will say that broadly, you count all of your nationwide employees. Anybody who worked during 20 or more work weeks in 2022 is going to be a part of your 2023 headcount. But the only individuals that are subject to families' premium requirements and entitled to families' benefits are those employees who are localized to Colorado. So you've got 1 employee and 2 owners who work in Colorado. Assuming that those 2 owners meet the exception to the definition of employee, then they wouldn't have to participate. And that 1 employee who ostensibly does meet the definition would have to participate. Would be you'd have to pay premiums based on their wages, and that 1 employee would be entitled to benefits.
Thanks, Evan. Here's an anonymous question. It is my understanding that out-of-state employees that travel to Why would an out-of-state employee that travels to Colorado for work be required to pay into the family fund? What if they live in a state that already has paid family leave? They would be expected to pay into two different funds.
So just thinking practically, without knowing the details of the specific circumstance, if someone only travels to Colorado here and there, and it's not part of their regular work, then they won't be covered. They wouldn't be necessarily localized to Colorado. The only way that they'd be localized to Colorado is if they weren't localized anywhere and their employer had its base of operations in Colorado. As far as so absent that, they would have to be working in Colorado pretty regularly, and that's likely not going to come up unless you're working in one of those states that border Colorado, none of which have a paid family medical leave insurance program. So if there's more questions about the intersection between if this person really believes that maybe they're subject to both the premium obligations under family and another state's paid family and medical leave program, I would request them to email us those circumstances so that we can give a more detailed answer.
Thank you, Evan. We have a question coming in from our live YouTube audience. The question is, do self-employed individuals need to do something to opt out, or is that automatic when I register and select a self-employed individual as my business type? Tracy and/or Evan, do you want to clarify that?
Yeah, I can take that one. So at this time, self-employed individuals do not really need to do anything. You're certainly welcome to register if you know that you wish to participate, but you don't need to do anything at this time until benefits become available to you in 2024. So no action is required if you are self-employed.
Thanks, Tracy. And we are running low on time, so we're going to try to get through as many questions as we can in the last few minutes. Here's one from Arlene. If an employee receives housing allowance only, does he count that as salary? If he has no salary, how does he get deductions paid into the program in order to participate? Evan, do you want to take that?
Sure. If an employee receives housing allowance only, that's a red flag for minimum wage purposes. So I'd encourage you to call the Division of Labor Standards and Statistics and make sure you're in compliance there. As far as whether or not the housing allowance counts, that depends on the details of the housing. It could be exempt basically from income, in which case it wouldn't be counted as wages. But again, that's sort of a more detailed answer. So you would have to look at the unemployment insurance regulations regarding the circumstances. They include housing as wages.
Thank you, Evan. Here's one from Janice. We will need to confirm that employees earned at least $2,500 in 2021 or 2022 before setting them up for this new deduction. Will we need to confirm this? Evan and Tracy, do you want to take that? Evan and/or Tracy?
I can take that really quickly. The $2,500 is a threshold to receiving benefits. It does nothing about premiums liability. You don't have to have made a certain amount of money before your Colorado wages are subject to premiums.
And here's one from Trisha. Will withholding and employer portion be submitted on a per employee basis or a lump sum? Trying to determine what is best for our internal accounting setup.
I mean, I do know that we are going to require the wage reporting down to the employee level. So we need to know each individual employee's wages, right? And the amount of the premium that they contributed to, if any.
Thanks, Evan. I'm wondering if, Jude, you might expand on the payment process in terms of you'll submit your wage reports. Your wage reports will help you determine what you owe in total as the employer, correct? Jude, you're on mute.
Thanks, Jessica. Yep, very high level, that's the process. Your wages for your employees are submitted. There is a calculation in the portal that will then tell you how much premiums are due for that quarter. And then there's different payment methods. So, but if you're a third party, if you're a larger third party that happens to calculate the same, replicate the same calculations that FAMLI does, you have, sorry, I'm going down a rabbit hole there. I do know that the larger payroll processors like ADP, Intuit, et cetera, they are replicating the FAMLI calculations and will make their payments based on that. But if there is any difference, the source of truth for what each employer owes is the FAMLI portal. So we'll always be able to see the account balance on the FAMLI portal.
Thanks, Jude. We're running out of time, but I'm wondering if we can squeeze in one more question about S Corps because that's a hot topic. Evan, so S Corps with two owners / partners would need to pay ? Both owners are W-2 employees, just like the other employees. Can they opt out?
So if you're an employee for tax purposes, that doesn't have any impact on whether or not you're an employee under FAMLI. And so if these two owners are business partners and both of them satisfy the two-prong exception to the definition of employee, then they don't have to include themselves.
Thanks, Evan. And we are out of time, everyone, but we will be publishing a recording of this webinar to our website, and anyone who registered will get the recording as well. And we will be sending out our monthly newsletter later this week to cover some of these common questions that are coming in. But thank you all for joining us today. Again, we have another live webinar coming up in January. Until then, you can reach out to us with questions, but I will hand it off to Tracy for her final thoughts.
Just thank you all so much. Please do keep in touch with us and we will do our best to answer all of your questions as quickly as possible, whether that's through our telephone number or through our email. Just feel free to reach out. Thanks, everyone. Have a